Hey everyone! Over the course of the last 15 months, the US economy has battled numerous headwinds. Significant tariffs on imports, weak job creation, and a military conflict in the Middle East that has sparked additional trade disruptions, an energy price surge, and renewed inflation. But despite these headwinds, the US economy has proven to be durable and resilient. This week, I'm going to highlight 3 trends that suggest the economy in the second half of the year will boost commercial real estate performance. And I'll start with jobs. From May of last year through February 2026, the US lost almost 50,000 jobs. One byproduct of that was reduced population mobility as fewer people relocated for work. But beginning in March this year, there was a shift in momentum supporting the creation of nearly 550,000 positions over the last 4 months. Metros that gained the most new jobs this year include New York, Dallas, Phoenix, Orlando, Los Angeles, and Houston. And if the hiring momentum is sustained, it could boost commercial real estate demand, particularly in the growth markets. In addition, beginning in April, there's been an uptick in the number of job openings while unemployment has remained stable in the low 4% range. If the US can sustain this job creation momentum, it will keep unemployment low while bolstering commercial real estate space demand. Apartments and office space could see the most immediate benefit. The second trend suggesting positive economic momentum is the Institute for Supply Management Manufacturing and Services Indexes. Both of these indexes, which are based on surveys of hundreds of companies, point to continued growth. The manufacturing index was below 50 for most of last year, suggesting a sector contraction. But since January, the manufacturing index has pushed higher, pointing to expansion this year. Similarly, the services index was hovering near the break-even point of 50 for much of last year, but it began to strengthen in the fourth quarter and remains in the mid-50 range, also pointing to growth. Historically, ISM indexes have been very good indicators of both expansion and recession cycles. And the positive momentum of these indicators bolster the outlook for both industrial and retail space demand later this year. The third trend supporting economic durability is retail sales. On a year-over-year basis, headline retail sales dramatically outpaced expectations, rising by 6.9% in May, with core retail sales up by 5.6%. And on an inflation-adjusted basis, core retail sales are up by 2.2%. Although some economists cite elevated debt as a potential headwind for consumption, in aggregate, household debt service payments as a share of disposable personal income remain comparatively low at 11.2%. Considering this metric averaged 11.8% from 2012 to 2019, consumers appear to be well positioned. So even though tariffs and elevated energy prices have raised inflation and created headwinds for the economy, retail sales continue to grow. And those retail sales gains suggest demand for both retail and industrial space will remain healthy. Now, while there has been a clear shift in economic momentum this year, several headwinds do remain. Tariffs continue to pose a challenge, and the renegotiation of the USMCA free trade agreement between the US, Mexico, and Canada could create new tariff headwinds. In addition, the Middle East peace process has proven to be very fluid, and the inflation outlook remains in question. At present, Wall Street is factoring in a high probability of a 25 to 50 basis point rate increase by the end of the year. But if the USMCA agreement is renewed and peace finds its way to the Middle East, inflation could ease. That could alleviate some of the pressure on the Federal Reserve, allowing them to avoid rate increases. That's not to imply interest rates will likely fall substantively, but it could keep the 10-year Treasury in the low to mid 4% range. If rates did decline modestly or even remain stable, that will be conducive to the commercial real estate investment climate. So even though numerous economic headwinds remain, the overall U.S. economic momentum appears to have shifted to a more favorable outlook. And that momentum shift brings with it the prospect of strengthening demand for all types of commercial real estate. And that's a positive indicator for investors who keep their eyes on the horizon.